Yo guys, Jay Clem here with a video on a lovely trade that I took not so long ago on EURUSD. So I just wanted to basically break down the mechanics of this trade, why I took this trade, and to show you guys, how you can take these trades too. So obviously, looking at this market, we can see that we are or have been in downtrend for quite a period of time. Obviously seen by a series of lower lows, lower high, lower low, lower high, lower low. We then break bullish here, giving us a higher high, higher low, higher high, higher low, onto a higher high. So the reason for me taking this trade in here is obviously that we are considerably bullish on the daily time frame. We seem to just be impulsing, no regard for pulling back down into this previous range, as obviously we've clearly created new daily structural ranges here. So that was obviously my higher time frame analysis for this trade in terms of the daily time frame. Now, if we drop it down to the 4 hour, the trade that I actually took was in here. So you can see the 4 hour have higher high, higher low, push up, higher high, higher low, higher high, higher low. We created this range, we pull back here and giving us a higher high in here. Let me just draw that on. High, low, high, we pull back, high, low, high. Okay. So when I was looking at the charts, I was focusing on this range here on the 4 hour time frame. So obviously everything is time frame relevant, right? The market's a fractal. What happens on the higher time frames also happens on the lower time frames and vice versa. So what do we need for a trade? Well, we need to know what's our structural objective. So when I came to the charts here, I saw that obviously we had this big push and we started obviously consolidating back down. And I wanted to get into a trade to give us that higher low to then obviously take out this high and give us the higher high. So my analysis was as follows. This is a 4 hour setup. So what do we need? We need to take some form of liquidity on the 4 hour time frame. We can't use 15-minute liquidity for a 4 hour setup, as obviously, like I said, price is fractal and everything needs to be time frame relevant. So what can we see here that gives us our first indication of where we want to be trading from? Well, I saw that we have this inside bar, okay? And what do we know about inside bars is that they are a range on a lower time frame. So if I just cut price, let's go here, and we go down to the 15-minute time frame, and we can see that obviously look, we have this lower time frame range, which obviously creates that 4 hour inside bar. So we know that inside bars, they can be a form of liquidity. So initially I thought, okay, I don't want to be trading from above this because 9 times out of 10, we will have a run on liquidity that's time frame relevant. So I know that I need to wait for this inside bar to be taken, which also stopped me getting involved in the market in these sort of intraday swings here. I knew that yes, there is obviously intraday trades that you can take, but overall, these are just trapping traders who obviously don't understand the full phase of the market, what needs to happen on each time frame, getting in the market ultimately just to be stopped out, fueling our moves, dropping us loads of liquidity that we can then use to fuel our trade. So that was the premise, obviously, of my 4 hour analysis. So I knew that I wanted to be trading below this. This was my POI, my point of interest, my order block, you could say, on the 4 hour time frame. Great. So now I needed to drop down to the 15-minute time frame. And what do I need to see to enter on the 15-minute time frame? Well, one, I need to see a big liquidation. I need to see traders trapped so that, I know that it's not me getting trapped. So we can see, obviously, we have traders being trapped here, traders trapped here, ultimately being stopped out, and even traders trapped down here again. So obviously, like I said, this is that 4 hour inside bar. So we know that we want to be trading below this low, as this is our 4 hour in range liquidity, in range inducement. So that's great. So we tap in. Now, because this is obviously a 4-hour setup, we don't want to be taking 1M entries, lower time frame entries down here, as you know, this is what happens obviously when you do is, you know, you can lose sight. You want to wait for that 15M shift in order flow, that shift in trend on the 15-minute, which obviously then tells us that our intraday time frame has changed back bullish, so we're likely to see you know, continued higher price. So we get that here. Ultimately, I'd be looking for this internal high to go. If you want to be safe, you know, you can wait for the 15-minute actual swing to go, but this is also okay for me. So let's just play price forward. Great. So we take that intraday high, which now tells us obviously that the market has shifted bullish, and we can look to obviously get involved in longs. Now, where do we want to get involved? Originally, so our first initial change of character, we see we have this inside bar, the low goes, then the high goes, then the low goes again, and then the high goes again after that. Now, this is mitigated, right? We come back and we fill these orders down here with this big wick, which then obviously pushes up. And all of these wicks, they trade higher than one another. So there's no actual internal run on liquidity here that we want to trade from other than this inside bar. So what are inside bars? Inside bars, they are ranges on lower time frames, like obviously the same thing that we saw here with the 4-hour inside bar giving us this 15-minute range. So I'm happy to obviously look in here for an entry. So let's just say that we're trading 15-minute, for example. We can set our order. This is a 11 pip stop. Obviously, we can refine these on the lower time frame, but I'm not going to go into that right now. And we tap in beautifully and give a nice impulse away. So once we're in the trade, the first thing we need to do is trade management. Where are we targeting? So first of all, this is a pro trend trade, trading from the lower 30% of the overall swing range. Let me just draw that on. So this is our swing range. So if I just put my 70-30, you can see we're trading from the lower 30%. We're trading out. So this is a very high probability trade to hold all the way to that 4-hour swing high, full volume. Don't need to worry about partialing, because ultimately, you know, the higher time frame narrative is that this high is weak because it has failed to take out this low. And as you can see there, we get a lovely impulse towards the high. There is more scaling opportunities here. Ultimately, I'll just go onto the higher time frame and just show you. We then push on and eventually take that high, which gives us, you know, a nice 200 pip move. Maybe you pulled 50% at this high, then you wanted to swing the rest. That's, you know, absolutely fine. Still an absolutely incredible trade, especially if you manage to get in here, you know, with the refined stops, obviously done on the lower time frames, then you can obviously do that too. I'm not going to show you that now, as it's just a quick, simple video. But yeah, and then obviously, you know, you can follow these up. You see how once we get that true structural realignment on the 15-minute time frame, these lows, they are respected because it's pro trend. So they're not going to run their own orders, if that makes sense, because the next logical target is the high. So all of these internal lows, and this is obviously our 15M structural lows, these do hold, and you can be confident they're going to hold, obviously, until that 4-hour high goes. Once that 4-hour high goes, you want to be looking to at least take a decent amount of partials, as you know, we could potentially come down to run some of these lows before continuing bullish again. But yeah, that's basically just a simple breakdown of this strategy. It's, you know, really easy. Just test it, find what works for you. Yeah, and that's it, guys.